Hello, welcome to Hedges Academy. My name is Jazzy, and you are watching today's most important CPI and Bitcoin analysis. Today's the we're gonna discuss the important announcement today about this CPI, and we're gonna discuss about the key regions of support and the resistance in the Bitcoin and across the market. And you see here the February 14 today on 8:30 a.m. New York time, the CPI is going to announce their result. And why CPI is important? Okay, we're going to discuss this here. Why CPI is important, and why it's important enough to move the market, okay, move the price. So it is because CPI is, guys, directly proportional and directly reflection of inflation, the numbers. And what we need to know is that Fed's mandate is to get inflation get down back at 2%, which is, in my opinion, not uh, easy. But their mandate is to reduce the inflation number back to the 2%. That's 2% is their target rate, that this sticking to right now. What is the rate we are sticking at right now is 6.5%, you know 6.5%. This is fucking whole 6.5% is really really big number right now. Okay, so what is happening, uh, how they are supposed to control it and reduce it while they have been increasing interest rate on monthly basis, right? We all already know that. We all already know that they are just increasing the rates on monthly basis. So let's just head on this. Like, you see, since rapid rate changing since 70s, I don't even born that at that time. Okay, it's like really much. It's too steep slope up. It's a really steep and going really rapidly up since 70s. You don't even born. So, like on 75 BPS, you see, 75 BPS on monthly basis. Okay, they are doing it since, and it's been really hard to manage for them. I don't, it, it's all it's only been recently. Rates has been improving. The inflation rates has been improving because they have brought these rate down to 25 bps. 25 bps. Let me just give you the, yeah, on monthly basis. So what happens that they just are too cautious because they know that it's too steep. The prices of the rate hike is going really, really upside of the interest rate since 70. So they are slowing it down, cooling it down, and they are making it 25 bps on monthly basis because they know that. So now it's going like this, but um, how now I do believe today's announcement gonna be very important. Why? Because the Fed has been increasing these rate based on two very important variables. Okay, first they're looking at the CPI. Okay, that is your first variable. And the second variable, most important, is that they are looking at its employment numbers. The employment numbers should, uh, because these theories, their theory is that, like, hey guys, because the chart market, the chart market is too tight and the wages are going upside. the wages across the board went up. Okay, like people's wages went up in the market. And those were very, very high wages were chasing the goods and driving the price of the goods up. Like, the wages are pricing are are affecting the goods price. Okay, the goods, their theory is that these are affecting the goods price and driving them to upside. Okay, to and adding, and that is inversely adding to the inflation, like and that is adding to inflation. Okay, that is what they are looking at the moment, that inflation is getting high because of the wages are across the board went up, and then they are adding to the goods and driving these goods price higher, and then these is adding to the inflation. Okay, that was their theory. So now they were looking um you know for the unemployment report. Okay, so unemployment report they are looking at, which was essentially very, very crude. Very, very crude terms is to that people would lose jobs. You know, people would lose jobs. They want people to lose jobs, and the employment rate report should come down in negative. Okay, so uh, what gonna happen, like why they are doing this? Because they know the employment rates goes down, wages goes down, goods price goes down, inflation goes down. That's the theory essentially. So so I am surprised people are not making big noises about that, but essentially that's what they were looking for, to see people lose jobs for the unemployment numbers. The unemployment numbers, they were saying that in unemployment numbers should go up, so they can know that the numbers of people are losing jobs. And for which means people lose jobs, which would then lead the higher wages under control, higher wages under control, which would then lead to goods prices goes down. The good prices goes down, which would then lead to the inflation going down. So vice versa. They thought that will be the recipe uh, to get them to that 2% rate of the inflation. The 2% of the like from here, 5% to 2%. That's the thought, that will be the recipe that will get them to that 2% rate of their mandate. But in my opinion, this is really not so simple for them, because recently, let me just clear up some charts. For example, you see here the inflation and everything. I just want to remove this to make it more precise for you. And okay, so recently, we have seen the unemployment data has been coming negative, which means people are getting money, people are getting jobs. Okay, yes, this is strong. This is strong. Okay, and what I am more concerned about this is if CPI comes in hot numbers, like higher than 6.5. Okay, if it comes higher than 6.5, then the rate hikes is going to be happen. They are gonna sit on a hammering rates hikes, and it will be like above uh 75 bps, like sorry, I mean 50 bp, above 50 bps. That's gonna be about 50 bps. So what we need to look right now is on today's CPI numbers. That gonna give us the clear directions what's gonna happen next, what will gonna happen the across the market. Either the market is going to dump, either the market is going to pump, or on the coming months, what FAD is going to do with the rate hikes. Are they going to make it more higher side? Because we have seen unemployment going down, employment is increasing, which is strong, okay. But if this we get higher rates like 6.5 above, then this means uh, they're gonna hammer on the rate hikes, and that will make your employment rate unemployment rate goes up, like we discussed earlier. That's their plan. This is their plan, okay. And right now we see the rates, unemployment rates report has been coming down in numbers. But what they're if we get 6 point above, then their plan will be activating like this, and they're gonna make the rates hike for making the unemployment raise up. And that's what they are planning to control the wages, goods, and then directly proportional to the inflation. That's what their plan is. So right now, let me just remove this. I really want this video to be really concise and short, because this is will be uploading on the YouTube in just couple of minutes. So I just don't want people to get bothered with the long video and too many mess on the chart. So I'm just cleaning it up. Okay, so right now you see here the since the October, the rates are coming in lower side. Like you see, if I can make it more like here we go. So 8.2, 7.7, then 7.1 and 6.5. So what people are forecasting is 6.2, lower than the previous, in the January. So yeah, the we have some report here that is 86% of the people are expecting the rate hikes to between to 25 bps to 50 bps. Okay, no, sorry, 25 bps, yeah. But 13.7% people are expecting the 50 bps rates hike today. So what I believe, that majority always wins. Majority of the people always wins. So probably this 86% are expecting 25 bps. So I expect that will be the slow pace of the monthly hammering. And in terms, I believe that in my opinion, after all of these typical calculation and research, I believe that majority, including me, I'm expecting 6.5 bps, 6.5 percent CPI numbers, equal to or lower. Like for example, like 6.5 equal to or maybe lower than 6.5. Okay, so that's what I'm expecting today. Okay, what's gonna happen to the market? Let's come to the point now. The point is to make you understand what is going to happen if that's the case. That's what majority people are expecting. If we see less than 6.5, okay, the market is going to rally. The market is going to across the market, including S&P 500. Okay, so that's what's gonna happen. But if we see CPI numbers coming greater than 6.5, okay, then market gonna dump across the board. Across the board means like the traditional market is going to dump as well. Market dump across the board. Okay, so you need to understand either the 6.5 or equal to or lower, like 6.5 remain the same or equal or lower. But if we see the above and greater than 6.5 percentage, then you're gonna see the market gonna dump. So let's now get back to the chart and discuss what if we get the less than numbers or greater than numbers, what will be the critical levels. So now we're gonna discuss about this, our critical levels. Okay, let's get back to the charts and discuss all of these things. So today, here we go. I have already marked down the levels, and you see the price is already making some kind of the dodgy candle here on 12 hours time frame. So this is particularly I'm just expecting that there will be a rally to the upside, uh, and taking all the stop losses of short sellers that has been shorting these these lows here, the fair value gaps also, filling this fair value gap along with the volume gap as well, and the shorting the range low on XO. I see the delta is coming in, so I believe that this is gonna displace above it, and we're gonna see towards the TPOC to 22,690 can be our the target if we see good numbers, like today's CPI. So this is our target mainly for like it will be like 4%, 5% pump to the upside. If we see negative numbers, like higher side, greater than 6.5, the negative for the market, basically. So what gonna happen is, I believe that this is going to be filling the gap, either volume gap here and the CME gap here as well. I'm analyzing today the CME chart only. I'm not gonna get to the Binance or Bybit chart. So this is the 0.5 of our swing high, and the swing low. So the equilibrium of the range is sitting over here, along with the volume gap, along with the CME gap. So this is my target, and the critical level is 21,000 towards 20,400, and also the last resort is the 20,000 CME gap. So this is the levels of my interest today. If CPI numbers comes in greater values, you see the market rallies after the CPI numbers, you see. So basically, you see the January, the CPI numbers was lower than the December. So across the market, you see a really nice rally to the upside in January. They're already priced in. The Wednesday, you see the price is just goes above it, and all of the market, including the S&P 500 on Nasdaq and legacy market, everything thing broke upside. People were expecting this 18,400, 500. They were shorting it heavily, and they all got liquidated to the upside. The liquidity has been formed to the upside while they were shorting since 16, 17K and looking for 12K and something like this already, but they failed to get those targets. So basically, what I believe today's is the make or break thing. Like if we don't get that stuff, if we don't get good numbers, if we don't get equal numbers, then I think I will be, I will be careful about this bull run. Like people were saying, this is a bull run. Then I will be careful about this bull run. This could be the bull trap, and it can go more downside. Like, do you see the rally upside on the CPI good numbers? On the bad numbers, you can see the price gonna reverse back to the lows probably, or maybe lower than that. So I will be more careful if the numbers coming in the bad terms. We already repricing in since for 1st February to the CPI date. So this is the repricing till the date. So in my expectation, what I am observing it from my opinion, that this is the repricing for the CPI, and probably we're gonna see the reversal to the upside, at least to the range high, or maybe we are just going to range a high and making the fourth wave and then putting up to this 25 or 27k target. So basically today's data gonna tell us what is gonna happen in the next, and is if this bull run gonna sustain or not, or this is this is a healthy organic bull run or not. So this all these things, all of these things rely on today's CPI numbers. That is the really important date today. Also from the astrology, 14 February is really significant dates for the Saturn conjunction, Venus conjunction, everything. So you need to know the 14th Feb is also the fifth time of the 50% fifth time. If I can show you on our paid Discord group, we already discussing that. We already have all of the data. We know that 14th Feb is the 55th time. We have all these sheet Fibonacci times contributed by our members. So we already are having really good data, all of the things together to trade. So let's see what's gonna happen on 8:30 a.m. New York, and I will be catching you on my Discord. Join our Discord. Go to our website hedgers.io to join our paid group. That is really cheap for the monthly, and you will be getting these type of information, well informed decisions regularly if you join our academy, our learning modules, our paid group. So I will see you in the next video. Thank you. Bye bye.